But for now, let's turn our attention to Harshvardhan Roongta. He is our personal finance expert for the day. And Harsh, the question today is, a lot of people delay their investments in the hope that there is enough time, or maybe because they do not have sufficient surplus to invest early on in their careers. How beneficial is it to begin investing early, or can it be delayed by a few years?
Okay. Actually, there's also an SMS query, Harsh. I'll add that in case we don't have time later, coming from Suchitra Sharma from Agra. She says that can she delay her investments if she wants to buy a house?
Okay. Well, I'll answer Rima first. Rima, let me use an example to explain how it is beneficial to start investing early. Now, if you take a case of a 30-year-old person who sets aside, say, 1,000 rupees a month, okay, this is just for calculation purposes. If you just set aside 1,000 rupees a month for, say, a period of 30 years, which is, say, retirement age is 60 years of age, and if you generate a long-term equity return of about 14% annualized return, the corpus that this person will accumulate would be about 54 lakhs with a 1,000 rupees over a 30-year period. Now, if he delays this by just 5 years, okay, he says that, okay, fine, I have enough time for retirement, I can probably start investing at 35. Now, if he starts making the investment from 35 years of age, so he has another 25 years left. If he invests the same 1,000 rupees, his corpus that he'll accumulate will not be 54 lakhs, but would be about 26.5 lakhs. Yeah, so it is about half of what he would have accumulated otherwise by just delaying in just a 5 years period that he's delayed. So that's the price that he would pay. Now, suppose if he needs to accumulate the same amount, okay, of 54 lakhs by starting at 35, he has to now start investing 2,000 rupees a month for the next 25 years. So this is the cost that you would pay to delay every year of your investment if you delay. So there is a huge cost that you're paying, not only in terms of losing time, but even otherwise. Now, there are other benefits. Now, if you start early, there are usually less liabilities, in the early years. So there is less burden on your finances if you're setting aside some money for investments. Besides, since you have a longer time horizon, you can allocate more towards your high risk, high reward assets, such as equities. As you grow older, the equities allocation will start reducing over a period of time. So these are a couple of benefits. What I would normally recommend or suggest is that why even wait for 30 years of age? If the first time you get your paycheck, ideally an investor should start investing immediately, set aside a portion of it for his long-term requirements.
Oh, come on, Harsh, get a life,
get
a life. At 21, you want to get a life, you don't want to save. Okay, a more serious question or boring question, how will you prioritize? Should you go for a house would that be the priority and not think of this, for my retirement, I put aside some money?
Well, Lata, what happens is buying a house is a very tricky question. Now, let me put it this way. If you're buying a house early in your life for your self-occupancy purposes, then it may be right to allocate all your investments for EMI purposes for your house purchase. But if the purpose of buying the house is again only for an investment purpose, then you need to stick to your asset allocation plan, which is that you need to have some bit in equities, into debt, you need to have precious metals into your portfolio, and then real estate. So it depends on what is the purpose of buying the house. If it's for self-occupancy, I repeat that you can, yes, allocate the entire fund for a moment, and as your income increases going by, you can start having equities and debt into your portfolio. But if it's for investments, then it is better to stick to the asset allocation plan.
Fair enough. We'll leave it at that, Harsh. Too many things to attend to today. Thanks a lot for joining us with your thoughts on this important bit of timing your investments. The earlier you begin, the better.